you can see the screen now. In this place, move to the right, move your cursor to the right. Okay, you can see the buy long, you can see the sell long, you can see there. So it's quite the same way you trade on forex, quite the same way you trade stocks. That's also the same way you trade futures. Just that the only thing you need to get is signals, just like the way you get signals for forex, you implement it in your trade. I think all the things we are learning in ICX forex trading is exactly what you need to know in futures trading, because uh, it is more or less the same. Because in futures trading, you risk your money to get profit, and that's the same thing we do in forex. You risk your capital to get profit. And I believe Mr. Mark has been doing well in guiding us on how to protect ourselves using the risk management, and still the same thing we're going to be doing here. So all the things that is happening in forex trading is still happening here in Binance futures trading. Just what you need is to master your screen, master the trade, then know how to set your take profit, your stop loss, and then how to enter your trades, and that's all. And how to set up your screen so that it will be very easy for you to access. Today we are using desktop. You can still use mobile phones. I'm trying to connect my mobile, but it's not. I'm having a network challenge, so that's why. Okay, now right here in this trade, you can see from the from the top from the top of this right hand side, you can see where they give you cross, and you can see 20x. You can see cross, and behind it you can see 20x. All right. Cross is the margin at which you trade with, and we have two margins in futures trading and Binance. We have the cross margin and the isolated margin. Maybe when we move, yeah, thank you very much. Maybe when we move further, I would explain those things to you. But it's actually the ways you control your money. That's how the thing works. Although I'll still explain that. So the 20x there, you can open the 20x. I want to show something now. The 20x, yes. Okay, right now you can see, just move it from 1x, move it down to 1x. You can see it is moving down to 1x. You can move it to 125x. So this is where you set your leverage. And I would advise you, for a beginner or a starter in futures trading, just like we've learned in our forex classes, learn how to risk your trade. Learn how to manage your risk. Learn how to manage your risk. Because this is actually where many traders got it wrong, and that is where they lost almost all of their money, if not part of all of their money. So, but when you learn how to use a good leverage for your trade, it helps you a lot. It is called risk management. So, in this, you can use between 1x to 125x. The higher the leverage, the higher the profit, and the higher the risk. Are you getting it now? The higher the leverage, the higher the profit, but higher the risk. So let's assume you wanted to trade on 25x using this BTC, because right here we have the pair we are trading here is BTC and USDT. So if you want to trade on 25x, we can call it 25 times. So if you want to trade on 25x, that means you are risking your money, that if the market begins to go against your order, you'll be losing by 25 times. But if the market is increasing, if you are making profit, you are making profit in 25 times. So that is exactly how it works here in futures. So I don't know if I still have some of my time again. Okay,
Oh, please,
so
you
that is
can go ahead. Yeah.
Okay, that is what we do here. So for you to trade on futures, you need to know the leverage you are going with. Not just because you want to make huge profit, you just increase the leverage. If you increase the leverage, there is every possibility for you to lose, if not half of your money, all of your money. I know someone who started trading on futures, and the young man just wanted to make huge profit, so he started with $1,000, and then he increased the leverage to 50%. That's 50x. He said he want to make profit, so, and immediately he entered the trade, and the market began to go otherwise. So the market began to defrustrate, and then he lost all the money within twinkling of seconds. He just lost all the money, and he was like, "What is happening?" But that's actually the truth. Your leverage determines how you manage your risk. So let's go back from there. So in this, you can select between 1 to 25%. But maybe when we start trading, when we start implementing all these things, I will show you the ones we'll be using. We're going to start from low leverage, especially beginners who want to make profit. You need to start learning with a low leverage. I always advise, if you are trading, use 3 to 5x leverage, 3 to 5x. If you are, yes, 3 to 5 is either you use 3 or 5, until you master the trade, know how to control your risk and everything, then you can increase the leverage. There are people that love trading with 20x, and then it makes 20x makes you a huge profit if the market goes in your favor, and then you hit something like 20%, 40%, 100% of the trade, you are on huge profit depending on the capital you use for the trade. Okay, so now let me show you another thing. Just close it down. Okay. When we start trading, I will explain more on that. So another thing is how to select the coin you want to trade. Go to the BTC/USDT. Yes. You see, when you open there, you see all. When you look at there, you see all. The first move up, move up, move up your cursor under USD feature USD coins, under USD and coins. Move up, move up. All right. You see all, you see BUSD, you see CX. That, yes, exactly. You see all pairs of coins are there. You can see all. That place that is all shows that all the coins you want to trade are now available. You are not selecting particular pair in this. So for you to get the particular coin you want to trade on futures, what you need to do, all you need to do is just, once the name of the coin is given to you, go to search. Once you get to search, type in the name of the coin. Let's just use this coin. Just type OPUSDT. Just type OP. Let's check. You see that OPUSDT, and we have OPUSD. So you can trade on this OPUSDT and OPUSD depending on the pair you are given to, the coin you are given to trade. So if you are given this OPUSDT, just click on it, let it open. You can see that now you are in the trading zone now. So for those who are using the mobile phone, I'll also teach you how to go about it. So for this now, if you go to the top right side, you can now execute your trade, because you are now in the OP USDT, and then is either all of you know what is trading. Is either you buy or you sell. So where you see buy long, or sometimes when the signal will be given to you, it might not give you a signal to buy or to short. They'll just give you short OP or long OP. What it means, whenever you see long OP, it means buy OP. When you see short OP, it means sell OP. That is what you see. If you look at the screen, you can see there buy/long, then sell/short. You can see it there at the top at the top middle of the screen. Okay, you can see there here. Okay, yeah. So that is it. And now, if you want to trade this OP, what you need to do is know the coin that they know the entry price. And I normally advise people, most especially beginners, if you are trading, if you want to trade, don't just rush because you see that the signal will be given to me, let me just rush, and you came to the market and you found out that maybe your entry point is 1.40 cent, and you saw the market is already at 1.42, but your entry point is below 1.39 to 1.40, and you say, oh, it's just moving small, let me just enter. If you are entering that trade at that point, you are taking a very big risk, and that risk can cost you to lose your money. So don't just enter the trade because you came to the marketplace and found out that the trade is moving on. Enter with the price you are giving, except you are giving between the price range. Okay. Okay. Thank you very much. That is FOMO. Thank you. Thank you. All right. All right. Thank you for calling me wrong on that. Okay. So in this, if if you are giving, okay, let me just choose entry point of 1.40 to 1.44. If you are giving 1.40 to 1.44 and you came to the market is still trading at 1.42, you are good to enter. 1.43, you are good to enter. 1.44, you are good to enter. But once it is above that, I will advise you, especially beginners, don't trade. Just wait for it to get to the entry price before you trade. If not, you have a chances of losing your money, and then you have a chances of not recovering your money again. So take note of the price. Take note of the price. Right. I think I love this. I love this young man. Mr. Mark, you are doing a great job. Thank you very much. So take note of the price, the entry price, before you enter any trade. If the trade has not gotten to to your entry price, you can better wait. You can even just set the trade, keep it there, allow it to enter the price that is given unto you. If it hits the price and enter, it's good. It's better for you to miss a trade than to enter a wrong trade. It's better for you to miss a trade than to enter a wrong trade, because if you enter a wrong trade, you have 99% chances of losing all your assets. So it's better you miss it that period. Don't worry, trading has not finished in this life. You keep trading to the end of the world. As far as we have the we have the crypto market trading will keep on moving on daily basis. So if you miss it today, doesn't mean you will miss it tomorrow. So don't just rush because you want to make money and enter a wrong trade. So I hope that is enough for that. Okay, in this, if you want to trade this OP USDT, what you need to do is just, once you are given the signal, the same way you enter the trade, the same way you enter trades on Forex, the same way you open trades, you open for long, you sell for short, the same way you do it here. Just first of all, set your leverage. That is the first place you need to focus. Set your leverage. Yes, thank you. Set your leverage. Don't just come in immediately because you see the trade is moving up small, maybe still in between the entry price, and you just want to just click on the trade and just start trading. No, make sure you monitor. Yes, I can see the arrow. Yes, make sure you monitor this place and check whether the leverage you set is still correct. For those who have been trading already, just check your leverage first. That's the first thing you need to check before even entering the price of the trade. Check your leverage, and then put like I said, you'll be using 3x or 5x. So anyone you choose to use on it, whether 3x or 5x, just set it. You can use cross, you can use isolated margin. Isolated margin is just a margin whereby you trade with a particular amount of money. So while trading with that amount of money, all you need to do is just enter the price, enter the amount, enter the price, enter the amount you want to trade. And then if the market is going down to the level that you got liquidated, it will only be the amount you traded that will be liquidated. But in cross margin, the trade has ability to interfere in your balance, in the balance you have on your future trading. I'll still show you how to fund your future trading and how to do that maybe in our next class. So yes, you can see it here. You can see the cross margin, you can see the isolated margin. The cross margin will have to interfere to the money you have in your balance. Let's assume you have $1,000 and you traded with $200 on this particular coin OP, and you traded on cross margin, and the trade is going against your order. Look at what cross margin will do. It will go to your balance. That's your balance. The remaining $800, it will interfere to the $800 that is there, and it will be using it to sustain your leverage. It will be using it to sustain your leverage, and it may get to a point whereby if the money that is left there is not enough, and you got to the liquidation point, the trade will lose. You just lose all the money. But when you set isolated, let's assume you set $100 and you have $1,000 in your futures account. You set $100 for isolated margin. Once your money got liquidated to $100, that $100 is gone. The remaining $900 is still in your account. So I believe you get that now. So just if you click on cross margin or maybe isolated margin, you just click confirm. Once you click on it, it will just click on isolated. Let's work with isolated. Click on isolated. Let's see. Okay, confirm it. You can see it has changed from cross to isolated. So you can just set it that way, set your leverage, and then you can see where the root price. And for those who are using smartphones or mobile phones, um, your screen might not be as the same as this desktop now. So maybe in the future class, I'll teach you using a mobile phone how to do that. Yes, you can see the price. This is where you enter your price. But before that, look at the top of this price now. You can see where they give you limit, market, and stop limit. Can you see that? Limit, market, yeah, and the stop limit. So the one you click on is limit. You click on limit so that you'll be able to enter exact price you want to choose, or maybe you just entered the market and you find out that it is still between your entry point, and you don't need to set the limit. You just want to enter between the market price. You can click on market. When you click on market, it means you choose for the market to decide the price for you. So whatever price the market is running, that is the price you're going to that the trade will be executed on. But if it is on limit, that means you want to set your particular limit. Even if the trade is still higher or maybe still down, you want to set it to a point whereby you can just, once it hits that limit, the trade will trigger and then start trading. So that is it. I believe Mr. Mark have done great job on teaching us about that in our former classes. So you set it on limit, click on limit. All right, thank you very much. Okay, click on limit. I don't know if I still have much time. I'm just trying to cover up some things. Okay, once you click on limit, you see the entry price. You see the price that is there already. Just clean it off. Don't work with that price. Clean it off and then enter your price. Let's assume you are giving 1.400 cent. You can just enter your price 1.400. You can see that. So once you enter the price, this is the price you are going to buy. Even if you can see the market is now trading at 1.7 currently. Now it's trading at 1.7 something something, so 1.47 something something. So we are not looking at that, but we want to enter when the trade is at 1.40 or maybe between 1.40 to 1.44. You can just set your price here. Don't mind the market price, then just set your own price. And then the next thing is the size. Yes, the size of the OP. That's where you set the amount of money you want to use to trade on it. So the size determines the amount of money you want to trade. Let's see, just let's use 10. I think 10 will be around. Okay, okay, you can look down. You can look down. Just come down a bit. If you are trading 10, that means it will cost you 1.43 USDT. You can see it there. Yes, it will cost you 1.43 USDT. So if you are trading 100 OPs, if you put 100 there, if you're trading 100, that is around 10.43. Yeah. Okay, you can see it there. Yeah, that's it. So the cost, once you set the size, it shows you the cost. So if you want to, let's assume you have only $100 in your futures trading account and you want to use the whole $100, you don't need to click on the size. You just need to move. Can you bring your cursor? Bring your cursor to the size. Yes. Move to the left a bit. Move to the left. To the left. I can move to that. To the here. Thank you. Thank you. Yes, exactly there. If you want to, if you want to use the whole money you have on your, let's assume you have only $10, maybe $20, and you want to use the whole $10 for trading on this OP at this 1.40. You can just click on that circle dot, then drag it till the end. You can drag, yes, drag it. Yes, you can drag it to the end. That is 100%. That means you are trading the whole $10 you have. Maybe you are trading the whole $50 you have for the same trade. So with that, you can see the size is 100%, which means you are trading the whole money you have. If you have $100 here, it will show you the cost that it is $100 that you are risking for this trade. So if you want to adjust it, you can still adjust. You can still adjust it to the first dot. The first dot is 25% of your trade. You can choose 25% of your capital for the trade. You can choose the next one, which is 50%. The second one is 50%. You can choose that one. That you are risking half of the money you have for the trade, and so on. If you click on the third one, 75%, and the last one, 100%. So that is how you set it. And in trading, don't trade more than you can afford to lose. Don't trade more than you can afford to lose. I believe Mr. Mark has been making that as a point to us all through. Don't trade. As far as you know you are not ready to lose that money, don't trade. But if you know you can endure once the money got liquidated, or once you lose your money, you are okay with it, then you are good to trading. But I'm not just trying to tell you that trading you are coming here to lose your money. I believe God will help us. We are not going to lose our money on this, and would be using it in such a way that it will benefit every one of us. If you implement all these steps I'm guiding you through now, it will help you a lot. So in this, once you have selected let's assume we are going for 100% now. So you can see the next box under it. You can see the next box, the TP and the TP and SL. Just click on it. Okay. Yes, you can see it now. Yes, once you click on it, it shows you an entry place like this. This is where you put your take profit and your stop loss. And mind you, this is very, very important. Very, very important. One of the guys who are in our Telegram group where we drop signals, one of the young guy, he entered a trade, especially I think it was on this OP that he entered it. We dropped a signal a few days ago. So he entered a trade and we give first target, second target, and third target. He hit the first target. Instead of him to take profit, he said no, you want to hit the at least second or third target. And by that, the market went otherwise from 1.6 1.70 to 1.47 that is trading now. It just deflated to that point, and the young man was crying. So just be careful. Be careful whenever you want to execute a trade. Set your take profit. Maybe in other videos I'll teach you how to set take profit one, take profit two, take profit that is target one, target two, how you can set it on Binance. Once it triggers to the first take profit, you take part of your profit, leave the other for the trading. Once it hits the second one, so I'll still teach you that when we write on. But aside from that, now once you click on take profit, you'll be given a particular price for you to take profit. Let's assume you entered the trade by 1.40 and you are given 1.52 for you to take profit. Maybe 1.52 to 1.65, depending on the depending on the rate, depending on the take profit you are given. So let's assume this is the first target. We are expecting to hit 1.52. So once you open the take profit, just type in one, or you can even copy from the text that will be given to you as a signal. Just copy it and paste it here. Then, but let it not be on market. Okay, it's good, it's good this way. Yeah. So the same way, if you set your take profit, then set your stop loss. Set your stop loss. In fact, if it be possible, don't miss these two things that I keep on mentioning. Set your stop loss, and then choose the better leverage that you want to trade with. These two things are very, very important. Your leverage and then stop loss. If you don't set this stop loss, you can lose all your money. And the best way to trade crypto is don't lose too much, gain too much. That's how you trade crypto. Because in crypto we have what we call 60 to 40%. So you are risking 40% for your loss, and you are risking 60% for your loss. Maybe in our next video, I'll share in our next class, I will share a video about that so that you still learn more on that. So once you are using 60%, you are setting 60% for your profit and 40% for your loss. That means even if you lose the trade, you have not lose all. Even if you gain the trade, you gain much. So that is what it means. Maybe in our subsequent class, I would talk more about that. So set your loss, your stop loss. Your stop loss can be 1.35, can be 1.35. You can set, depending on the stop loss you are given, you can set it as 1.35. So once the trade is going against you and it hits to 1.35, the trade will just close automatically so that you won't lose your money. So once this is done, if it is a buy order that you have set all this, you can just go ahead and click on buy long. Once you click on it, the trade will just, it will just, if once you, yes, yeah, once you click on buy long, if it is a buy trade, once you click on it, it will be activated. If the price is not yet the market price, it will wait. It will just be in your open trade until once it hits the particular target, then it now triggers and began to trade. So the same thing applicable to short. If you are given the same signal for short, you can just do likewise and then hit on sell short, and then you are good to go. If you choose a market price while clicking on this, that means it will trigger with the market price instantaneously, and then the trade begins to count. I think I need to stop here for now. Maybe in our next class, I would be able to explain more on this, and then we would work with a particular signal by then, so that you see how it works. Okay, thank you very much, Mr. Blackbrains, and all the ICS leaders on board. I want to use this little opportunity to say thank you to every one of you. You're highly welcome. Thank you very much.
Okay, thank you so very much, Mr. Besttime. And I think we have Besttime here with such a wonderful introduction to future trading on Binance. So, whether you have Binance, KuCoin, any platform, you can be able to apply this knowledge over there. Now, just to add up a little, we have the charts here. The chart gives you every information you need. But if you are the type that like using trading view like I use, You see over here, we have original. So this is the original chart displayed to you by Binance. Then we have the integration aspect, which is the trading view. Okay, so you have the opportunity. You can use the original view or you can use the trading view. Now, when you use the trading view, the only difference is that you have access to all the tools that works with trading view. Okay, so you can add your EMA, you can be able to draw your your take profit and stop loss. You can use other tools like Fibonacci, the Gann, the fan, and whatever. You can be able to do your analysis by identifying your short positions, the take profit, your risk to reward ratio, and all those stuff are added advantage when in case you want to use the trading view as well. All right. So that is it for um today. As far as Mr. Besttime is in concern, the truth of the matter is that it is getting better. So those who like missing the class, there's no problem. They can keep missing it. But if you have any question for Mr. Bestman, yes, he's the man of the moment right now. If you have any question, you can just raise up your hand or you send it to the chat box. We read it, you get your answer. And if you want to rewatch to the video will be reposted where you can watch it as well.